Have you been thinking about buying a house, but you're worried about how your credit score could impact you? A small difference in your credit score can make a huge difference in your ability to buy a home. Not only does it impact your monthly payment and your interest rate, but also the loan amount you will qualify for. In today's video, we're going to talk about 3 ways you can increase your credit score fast so you can be ready to buy a house in 2025. Hi, I'm Abby, a licensed real estate agent with Signature Home Group. My sisters and I run a real estate team together, and we have helped over 1,000 buyers and sellers navigate the complicated real estate market. Now let's get into it. The very first thing to do when it comes to improving your credit score is to pay your bills on time. I know, that seems super obvious, but this tip can have one of the greatest impacts on your credit score of all. Even if you have no other negative hits on your credit, one missed payment can drop your score by a significant amount. It's important to know exactly when a payment is considered late. Credit bureaus have a couple classifications, which include 30 days past due and 60 days past due. This means that a payment must be received more than 30 days or 60 days past the due date to be counted late. Obviously, the later the payment, the greater the impact on your score. In other words, if you realize your credit card was due 3 days ago, don't assume it's already reported as late and forget about it. You need to go pay the card since it won't be reported as late until it's more than 30 days past due. Now, your credit score is only one of the factors to consider when getting ready to buy a home. To see an in-depth list of all of our tips and tricks for buying a home, click on the link in the description box below to grab our home buying guide. If you're rocking your on-time payments and want to further improve your scores, one thing you want to focus on is credit card utilization. What does that actually mean? Well, it's the balance on your credit card or another revolving line of credit compared to the total available credit on that line. The key is you want to keep that utilization to 50% or below. Let's look at an example. If you have a credit card with a $10,000 limit and you have charged $7,500 on it, that would give you a 75% utilization, which is considered high and is going to negatively impact your credit score. In this scenario, the goal would be to pay down that card to $5,000 or less, giving you a utilization of 50%. Now, in an ideal world, it's best to keep your credit card utilization to 35% or less, if possible, to give you the best boost in your score. In this example, that would mean paying down that balance to $3,500 or less. Another way to accomplish those lower utilization rates without having to actually pay down your card is to call your credit card issuer and ask for a credit line increase. If you have a good history of paying your card on time and haven't asked for an increase recently, you'll have a better chance of getting an increase. Now let's go back to our example. If you have a $7,500 balance on a card with a $10,000 credit limit and your credit card issuer agrees to increase your limit to $15,000, now you have gone from a 75% utilization to that 50% utilization we're aiming for without ever paying the card down. Another thing you can do to improve your credit score is become an authorized user on someone else's account that has good credit. Now, this can be anyone. Your mom, your dad, your boyfriend, your girlfriend, your spouse. Now, of course, it has to be someone who trusts you and is willing to allow you to be added. But if they are willing and they have a credit card that they've had for a good length of time with a good history of paying on time, by adding you onto their account as an authorized user, they're giving you a card on their account that they are responsible for. The beauty of this method is that their credit history for that account now reports under your credit history once you're added as an authorized user, which should cause your credit score to increase as a result. Now, you of course don't want to be added to someone's account who has maxed out credit cards or a poor history of paying, because that's going to hurt your credit score. The goal here is to find someone with high credit limits and a long credit history to increase your credit score by being added to their account. The thing I want to stress here is that your credit score has a huge impact on your ability to buy a house. And it's something that you want to start looking into and working on now rather than later. The last thing you want to do is be surprised by what you find when you go to apply for a loan. Now, if you're watching this video and you want to know more about how you can get yourself prepared for success when buying a house, click the link below and get our free guide and check out this video here.